Way off the lows of this session is buying a dip, folks. It's starting to nibble here a little bit. I will tell you, I have my subscribers take profits on U.S. Steel and Hecla Mining. I know they got upgrades, but I want to sell into strength because I'm also champing at the bit to buy some of these broken down growth names. Joining me now, Michael Lee Strategies. Michael Lee. Mike, I know you're spying some entry points. What are you looking for? What do you look for before you would buy some of these really high-flying, high-beta names on weakness?
You know, I need to see more blood, and I need to see a little bit more follow-on. We saw today the follow-on from yesterday, and again, it's just back and forth. Are we going to have inflation? If we have inflation, that crushes high-flying growth names because you can buy these value names, which are going to grow at a much cheaper valuation. So I think we need to see worse. The market is not entirely buying this inflation argument, and I think that's why we've seen such a dramatic bounce back today.
So you're saying the market is grappling then? I mean, because the overarching word out the gate today, inflation, inflation, inflation. We don't see it in the bond market right now, but you do see it in commodities prices and a whole lot of other places. But you're not buying it completely. Why not?
So Charles, a few reasons. So, you know, on December 31st, analyst estimates for the S&P 500 were approximately 1/3 or less of what they came in at. So if Wall Street sell-side analysts are that far off, how can commodity producers and other points along the supply chain be prepared for the amount of growth that we had in the first quarter, second quarter, and I think third and fourth quarter we're going to see this year? So what I think you're going to see throughout the year is a ramp-up production, COVID problems in the supply chain solving themselves, as well as the rate of change, the speed of growth slow, so we'll still be growing next year, just albeit at a slower rate, with much more supply, much more efficient supply chain. So a lot of these prices will come back down. And also the banking system is broken. You have deposit growth outpacing loan growth. So without that velocity of money, we're not going to see this runaway inflation on a sustained basis.
Man, we haven't had velocity of money in 35 years. That's a big problem I'm always talking about. And I've got a minute to go. So I know you were right about there. Is there any idea that's on your buy list, something you might consider before the close, particularly some of these names off 30, 40, 50% from their highs?
Yeah, well, Charles, the one that I like that you and I have discussed before, it's only about 12% off their high, is NVIDIA, right? That's something you always buy in weakness and keep adding to. There's a huge chip shortage and a huge chip problem that's going to, I believe, resolve itself over the course of this year. And I think we are going to hit many more new highs this year. I don't know how much higher those highs are going to be, but I think the best days and the highest points in the market are yet to come for this year. I think these tech names will participate. I do think we're in for some volatility as bonds trend a little bit higher.
All right, so folks, buckle up. But if you have the nerve, you will make a lot of money, according to Michael Lee, particularly in these tech names and these chip names. By the way, the SOX was down almost 5%, so I agree. Oversold. We'll see you again real soon, Mike. Meanwhile, Liz Clayman, over to you.